Good afternoon, good morning, good evening, dear participants of this exciting side event within the community-driven session that we have organized together with an exciting panel of experts and speakers. We are welcoming all the attendees to this event, and we have a very interesting agenda on the table and very acute question which we would like to discuss today is how to really finish the unfinished business of Agenda 2030, how to really identify a way of cutting the costs of remittances, which everybody has been speaking about for so long, and now something which became particularly relevant and important. So before we start, we have only not so much time, not even few hours, 1 hour and 20 minutes to spend together with all of you. And we have prepared, as I mentioned, a lot of content, but also a lot of questions to discuss with you. And let me first introduce the agenda of today's event, as well as participants of it, panelists, as well as how we are going to work together during this 1 hour and 20 minutes. My name is Marina Manke, and I head Labor Mobility and Human and Development Division within the International Organization for Migration. For those of you who do not know much about our organization, IM, it's the organization which has been already operating for more than 65 years. It has recently become a member of UN's family, a couple of years already, and it is the one which is coordinating the network on migration within UN. So I will be moderating today's event together with our participant Ralph Chami from the International Monetary Fund. So we will be going through the content which we put together, as well as moderating the interactive session, which will take place after the presentations. So as we move forward, I'm asking all the participants, attendees of today's event to really use the question and answer window in your Zoom environment. And we will make sure that we really attend to each of your questions, but feel free also to provide your feedback in the question and answer session, so that again we manage to get to the bottom of a very concrete question. Good. So, speakers, I'm really delighted to present this panel of experienced professionals. I'm really honored to be with them today. During this event. As you see from the list, it's really a team of professionals who work both in international environments like myself and Ralph, but also those who have established their own initiatives. And it is really into zooming into those concrete initiatives that we are going to really devote our time today, because we are not only talking about the problem itself, why it's important to look into remittances, but we are also trying to propose to your attention a number of concrete solutions which have been tested out, which have gathered some momentum, and we believe that it's time for us to action. So we will have, in addition to myself and Ralph Chami, Mr. Christopher Williams from RTpay, Mr. Francis Mugisha from African Director of TransferLink, together with colleague from TransferLink, the CEO of actually the organization, Brian Connolly. And we also have Amit Sharma, the CEO of Fin Inclusive. So, what is it that we are going to discuss today? We'll start from the broad context setting. We'll look into how remittances and the costs of remittances is relevant for broader development agenda. We'll really zoom into the impact of the current pandemic into the on the situation of different population groups, And then, as I already mentioned, we will go into concrete solutions from RTpay, TransferLink, and FinInclusive. The colleagues will present those. During the interactive discussions, we are proposing to look into the questions, whether the proposed solutions are doable, what needs to be done to really make them a reality, and who needs to action. Let me say a few words about the broader context. I apologize if there is some technical issue with the transmission. I'm seeing from my colleagues that there might be some. If it becomes really challenging, do let me know. But I hope that we will all overcome. In any case, I will pass the floor soon to the other speakers. From my end, I just wanted to draw the attention to the fact that the current pandemic is really impacting not only the health situation, and it really is not the health crisis, but really it has really important dimensions, economic impacts, economic costs, and the social costs. At the global level, we are aware already, and we can calculate those impacts. From the economic side, we see dramatic drops not experienced before on the trade sector, anticipated to drop between 13 and 32%. Tourism revenues are going to drop. The foreign direct investment, GDP, and of course remittances is something what we are zooming into. From the social side, from the impact on population and various groups, we are anticipating that there might be a risk of additional up to 100 million people dropping into the extreme poverty. And that's really unbelievable to see these estimates. Also in terms of food security, up to 265 million people might also experience that additional shortage of food. And from the job market perspective, around 400 million jobs are going to be disappeared. That's the estimates of the UN system, which have been recently projected and put together. The topic of impact of pandemic and the specific impact of remittances on the relevant population groups is gaining traction in the policy discussions and different processes. As you know, remittances are really a vehicle of supporting livelihoods of not only migrants but also their family members. This has been recognized in Agenda 2030, which is aiming to support efforts, international efforts to reduce the costs, because in certain corridors, the costs are unfortunately so high that it really is hitting the situation not only of migrants but also families whom they are supporting. To address the issue of broader lack of financing for development, which is becoming also very acute in the context of COVID, the UN system right now is supporting the dialogue among various stakeholders, and recently the results of UN partners with private sector stakeholders as well as financial institutions. There was a meeting of ministers of finance which took place, where again broader lack of finance for addressing the challenges of the pandemic were looked at, as well as a specific working group presented its results on shortages to external aid, to impact on job market, and also remittances were under discussion. I'm requesting all of you, inviting you to look into the link which will be available within this package of presentation, and you will be able to learn more about that process of coordination and advocacy among the UN system and policymakers. The heads of state and government meeting is scheduled for 29th of September. There is also work of our organization to advocate for the importance of remittances, specifically with UN Network on Migration with UN partners. We have been also putting together various policy briefs and advocating for the importance of looking into the situation on the ground, not only from the macro level perspective, but also how migrants are experiencing that. But I'm not going to speak more, because we'll have a next speaker who will be explaining all the hardships which migrants and relevant communities are undergoing right now because of the pandemic. But I do want to also mention two more initiatives related to that, again, from the policy perspective. One is also where I am a part of, together with a lot of other organizations, is the UK-Swiss Call to Action, which has been joined by around 30 governments already. The call to action advocates for the importance of 9 policy measures. And finally, but last but not least, of course, a very detailed thematic and very technical report is forthcoming under the coordination of IFAD. Again, our partners have gathered a number of working groups, and they are advocating for, again, concrete measures which can be taken to address the issue of remittances. Again, I have only skimmed and presented a little bit of a general background, but now I'm welcoming the intervention of my colleague Ralph Chami from IMF to continue explaining why we are drilling into the topic of remittances today and why it's so important to act for us. Ralph, over to you.
Thank you, Marina. Thank you all for joining us. Let me get into the presentation because of the time constraint. So why are we here? Why are we talking about reducing the cost of remittances? Because remittances are incredibly important. They are typically viewed as the lifeline for many of the low-income, middle-income, and fragile states. Next, please. Let's remember that remittances are the financial side of a migration phenomenon. You have latest estimates from the ILO. We have about 165 million migrant workers. They send money home to their countries. They send them a few $100s here and there. But when you add them all together, the amount through the formal networks only, I'm not even talking about informal or the remittances that don't go reported, is about $550 billion per year, at least in 2019. Next, please. When we look at flows into low-income, middle-income, and fragile states, people sometimes think of private capital flows, portfolio flows, FDIs, nothing of the sort. For these countries, the most important flow that comes in are what we call the income flows, and these are the remittances. Next, please. Okay. So what has happened throughout for most of the time, remittances are viewed as stable. They are, in fact, when you look at their volatility relative to all the other flows, they're the least volatile. That has meant that countries, household in the recipient countries, and as well as the governments of those countries have come to rely on remittances as a source of income. Okay, next, please. Okay, so what happens when these remittances come in? Okay, although they trickle in a few $100s here and there, and as I said, they add up to a sizable amount. What for the households themselves, they help them in terms of increasing their ability to consume. They buffer them against shocks to their consumption, to their income. Households use also these remittance income to spend more on healthcare, on education. If they would like to start a business, we call it, they alleviate any credit constraints. They don't have to go to a bank to get a loan because their cousins and their family members sending them money to help them start a business. So they use that in order to enhance their self-employment or even engage in informality. Next, please. Okay. But question for us right now is, so this lifeline, how is it doing right now? Is it surviving the pandemic impact? And the sad thing, I've been working on remittances for 22 years. I have never seen this picture before. What's happened is, unfortunately, remittances, as hinted to by my colleague Marina, has already been hit just like every other flow. And the first chart on the left comes from our colleagues at the World Bank. which shows that not only did capital flows and portfolio flows are tanking due to the pandemic, but also remittances are also dropping at the same time. And that's what I call the perfect storm, because remittances are typically viewed as counter-cyclical. They come in when countries are in need, or recipient countries are in need. Unfortunately, this time around, they may not be able. So the drop of 20% projected by the World Bank, 17% by the IMF, we're talking about over $100 billion at the minimum, okay? So what's happening is the remittances now, rather than being the lifeline, they're actually another channel of transmission of the crisis on top of the trade channel, the tourism channel, the financial channel. Now you have to worry about the transmission of the crisis due to the COVID pandemic through the remittances to the recipient countries. So what does that mean? Next, please. That means just the opposite of what I just showed you. In light of the COVID pandemic and the impact on the lives of the migrants in the rich countries, because they are losing their jobs as the citizens of those countries are losing their jobs. That means they can't send money home. And when they can't send money home, even in the amounts they used to do before, that means the households back in the recipient countries are now witnessing a drop in consumption, an increase in poverty. They're not able to spend on public health or on education. They now need to borrow. And now, whereas before they were using some of that money in order to be self-employed or not to engage in the labor market, now they're going to have to go to the labor market that is already brimming with the unemployed youth. Most of them are youth and unemployed, and now they're going to try to seek employment, worse yet, underemployment. Next, please. The impact doesn't only stay with the households, it's actually the governments are now affected, because remember, those remittances were so stable that governments relied on them as a source of income. So what governments had done in many of these countries, they've used value-added tax, sales tax, to tax the consumption, because most remittances are used for consumption. So governments have used that as a revenue for their tax base. So now when the consumption tax base is shrinking, that means their tax revenue is shrinking for those governments, and now the governments are finding that they have to increase their spending on public health. They were using some of that revenue from the tax in order to service their debt. Now they have to increase the debt. They have to come up with additional sources to service their debt. And they can't even engage in counter-cyclical measures to buffer the impact of the COVID shock. So now they're going to have to borrow in order to do so. Next, please. The impact is not only fiscal, it's also financial. You see, what happens is remittances are a cheap source of funding for banks in the recipient countries. Well, what's happening to those banks? Well, they're finding out that that cheap source of deposits is actually also dropping precipitously, which is going to impair the ability to lend, if they ever lend, okay? And which is going to raise the cost of funding for borrowers, including the banks, which is also going to have a stability impact on the banking sector in the recipient countries, because it's going to reduce the amount of capital that they have in order to buffer any shock that they may experience. Next, please. In terms of monetary policy, it's also impacting the monetary policy. Let's remind ourselves that many of these recipient countries that receive, or countries that receive remittances, have a fixed exchange rate. So what's happening now with the drop in the reserves due to the drop in the remittances, along with the drop of every other revenue, their exports, tourism, trade, and so forth, there are devaluation pressures. For those that don't have fixed exchange rate, there's some sort of a float, they're seeing depreciation of their exchange rate. But the sad thing about this right now is that countries will not be able to export themselves out of this crisis. In the past, you think if your currency devalued, that means your exports are cheaper, tourism is cheaper in your country, therefore you can buffer that shock. Eventually, in this case, because this is a global shock affecting everybody, even if your exports are cheaper, no one is coming. Even if your country as a tourist country is cheaper, no one is coming, because now the other part of the coin, the other side of it, they're also impacted by the COVID crisis, and they have also fear of, whether if they get to your country, they're going to be impacted by the COVID pandemic or not. So they will not be able to export themselves out of this crisis. Next, please. If the labor markets now in these recipient countries, let's remind ourselves, for many of the recipient countries, these are labor markets that are brimming with unemployed and youth unemployed. So now the self-employed, people that were self-employed because of the remittances, are going to lose that cheap source of funding. They're going to find themselves losing their employment. And typically females suffer the most, whether it be getting into the labor force or the first to feel the effect when there's any negative shock. So you're going to find unemployment higher among females. And all that means is that more people will be joining the already high unemployment and engaging in underemployment. All of this means it's going to be tremendous social pressure and on their safety nets and on the governments in those countries. Next, please. Worse yet is that in many countries, rich countries where these migrant workers are sitting, when the crisis hits and people lose their jobs, a lot of these migrants lose their ability to stay in those countries. They lose their residency. Okay, that's one. Two, let's remind ourselves that in many of these rich countries, the migrant workers face abysmal housing conditions. They are housed 20, 30, 40 to a room. So the probability of infection is very high. One gets sick, everybody gets sick. So now you're in this rich country. The country is, everybody's been hit by COVID pandemic. Okay, there's a crisis of employment. You're going to lose your employment. The probability of you getting sick is higher. And now you lose your residency. And now they put you on a plane and send you home and you're sick. And you're coming back to a country, remember, this is low, middle income, fragile state that is already having a very, very tough time just controlling the situation among its own citizens within the country. Now they see their own citizens coming back. They've lost their income. They're not healthy and they need help and they're going to look for employment. All of this means social pressures. Next, please. I call this the boomerang effect because what's going to happen is all that social pressure within could easily spill beyond the borders of the country that is involved. And we could likely see another intense refugee problem. But let's remind ourselves that now the narrative about refugees coming to safe havens has changed tremendously. There's less acceptance of refugees, okay? And so we may be looking at a much bigger problem than just the loss of remittance income and refugees and remitters going back home. Next, please. So what must we do about it? Let's remind ourselves here that no one is doing anybody a favor. We're all in this together. Okay, rich countries, poor countries, we're all in this together. So the solution has to be a portfolio solution, okay? And so first, in host countries, what can we do? Well, just as we protecting our citizens in terms of providing them social insurance in case they lose their jobs, continuation of some sort of an income, a baseline in order to help the households, we should extend the same to the migrant workers in these countries. Why? Not because any sign of benevolence on our part, it's only because the migrant workers in the host countries are actually part and parcel of the production process. So when we want to restart our economies, we need those migrant workers who have the know-how, who have been part of the production process before to get on with the business. We don't want to lose them, okay? So one recommendation is just the same packages that we offer our citizens, we should be offering our migrant workers, including social protection. It's high time we do something about the accommodations, the abysmal accommodations that they've been suffering through, that I pointed out before. Now, we know the SDG 10, we've been on the books forever talking about reducing the cost of remittances, and my colleagues will really, that follow me will be talking about this in much greater detail, but it's high time we do something about the high cost of remittances. Okay, of remitting. Okay, the SDG 10 says we should, it should be below 3%, and we're nowhere near the 3%. Also, this is a chance for digitization, fintech solutions, creative solutions about reducing the cost of remittances, especially because of this crisis. Next, please. What can IFIs as international financial institutions do? Well, what we do best. We provide technical support, capacity development support. We should be providing financial assistance, and I know my own institution is out there providing all kinds of financial assistance to these countries And again, I want to come back to the SDG 10. We need to do something about reducing the cost of remittances, okay? And the last bullet point is just basically what IFIs typically do, shoring up the fiscal and the balance of payment needs of these countries. And finally, the last slide is let's remind ourselves that we are all in this together. And I always give this visual at the end of my talk. Imagine we are all of us we've all fell into a river with a raging current, okay? And there's no one on the bank of the river that can throw us a lifeline. Either we hold hands together, we are tied by a belt of humanity, we pull ourselves together. If one of us goes under, all of us are gonna go under. Okay, so hopefully we'll get together and do something concrete about this crisis, especially in light of this session itself, reducing the cost of remittance. Let me stop here. Thank you, Marina.
Thank you very much, Ralph. Indeed, it's a very acute situation we are on, and thank you for bringing all the important reasons and implications the situation has. Both on the economies, different sectors of the market, and of course on the population and people themselves, and then also drawing some concrete action points to both governments but also financial institutions. So we hope that with this initial introduction of myself and Ralph, we have set some sort of a stage for now going directly into the concrete solutions and ideas that the next three speakers are going to present. And again, to all attendees and panelists, feel free to suggest your questions as we go with the content, with the presentation if you have. So we will address them after the interaction, after this session. Next speaker, Christopher Williams. I'm happy to present Chris, who has a lengthy career in foreign exchange management, and of course, in particularly, what is interesting is Chris's background in really working in the non-profit area and really having some initiatives. So this is another one of those which is really directed towards how to solve the issue of high remittance costs. Chris, over to you.
Yes, hello everybody. I'm Chris. I'm with RTpay, Real-Time Pay, which is a non-profit consultancy group, which I hope will maybe, after a fairly depressing presentation so far, maybe we'll bring some brightness to it in the end. But let's see if we can make some progress. Next slide, please. As I say, the basis is that we actually concentrate on what to most people would be rather uninteresting and boring functions, which I accept I've been told often enough at cocktail parties through the many years, that foreign exchange trading and transaction processing don't set the world on fire, but they are very important, and particularly for remittances. Next slide, please. I'm not going to do anything like going through all of the fascinating data that Ralph and Marina have already dealt with, but I mean, I'll just highlight very quickly, you know, the pandemic is deadly, but the recession it's caused is much more deadly. This is the factor that we really have to address. And the Oxfam prediction, which sounds awful, 12,000 deaths per day due to starvation, that's directly related to the pandemic-based recession. And it's how we deal with that we're here to try to address. And the fact that remittances are a direct cause of that starvation, in the sense that because of the dip by 20%, etc., as dealt with by Ralph, that loss of jobs is causing a massive problem. Our job is to see what we can do to cut the remittance costs and thereby reduce the loss. We can't do it all, but I think we've got a reasonable chance of halving that 20% deficit. And you'll hear from three of us as to how we want your help and to be able to do that. If we can do it, if we can bring the cost right down, then we've got the opportunity of encouraging more people to give more. Now, there will be those loss of jobs that we can't do anything about, but there are other people that can get tempted in because they've got connections from maybe 2 or 3 generations ago from their homeland. And the more we can get them to see, if they're getting a fair deal, if they're not being ripped off by 15, 20, 30% being charged on their $100 or $500 being sent back, and they're getting to that virtually all of that is actually going to get to the people they want it to, then that's our job and we would have done something worthwhile. What works for remittances can also work for aid payments, microloans, and diaspora bonds. And I think I would say one of the exciting things for us about being right at the end of it, but part of the UN 75, is the fact that you have the capability as the UN to reach out to 190 odd countries. And that is what's necessary to try to encourage everybody to achieve these savings by working together. Next slide, please. I'm not going to go too far into a lot of the technical details because I don't have time and I'll get ticked off by Marina and she'll cut me off. But that aside, I'll just cut some of the few points. All recipient countries, those that have people that are going to be receiving the money, always have more hard currency needs than they have from remittances going in. Now, this is a truism, and it's a very simple one, but the fact is, if we can stop charging the foreign exchange on sending the remittance into that country, knowing that they have a requirement for more than hard currency that is going in, and we can do that offset for it, then we will have achieved 2 savings. We've saved the whole of the foreign exchange on the remittance, and we've saved some of the foreign exchange on the other side. Those are very, very important pieces, particularly because the foreign exchange is the major source of the cost of the remittance. It's not so much the other pieces. It's not the bit you see quoted as being the cost of your remittance. It's what's hidden in the foreign exchange rate. And our saving that is going to make all the difference. In many countries at the moment, they are under pressure, as Ralph explained. Their currencies are under pressure. We don't want to put more difficulty on the governments. We want to help them by making sure the funds are committed into their currencies so they continue to control everything. But there will be a stage where there is a bonus function, i.e. that there are a number of people that are going to be bidding a higher rate for hard currency within that country. And we want to achieve getting the best rate by a structure of bidding within there. And from that, we create a bonus for the remittance recipient. They are the most important people to us. I think they're probably the most important people to all of us in this environment. We're not too worried about the bankers. We're worried about the recipients. So that bonus can actually be of the best possible prices. Next slide, please. Our position is that the way in which we operate it, and as I say, I can't go too much into it, but in the sending country, we want to manage the collection of the remitted funds within the domestic environment, in the domestic currency, bring them all into a central domestic point. Doing transactions internally in virtually every country is 0 cost. So we can do all of that without adding any bank fees or anything else to it. And what we do is it doesn't matter where the funds are going to. They can be going to 50, 60, 70 different countries from different people within that country. But we're going to take one amount, which is the total amount of that currency, and we're going to deal with that as a single amount to put out into an international clearing point. So we only have one transaction a day, and so our banking charges are further reduced. We do everything we can to be as efficient for our people, for the remittance senders and recipients, and we're trying to reduce what the banks take out of it. Sorry, bankers, but that's our job. The other factors which we will get into, but I can't do now, timing-wise. Regulatory approval is a factor which will be dealt with much more effectively by later within this. But assuming we get that regulatory approval, which the structure that Amit will discuss does, it can be done in virtual real time, then we can deposit the actual fiat funds for the recipient in real time. So it's important because often the requirement is urgent for the money. Next slide, please. I accept that our aim to do this at a zero cost will take a little bit of time. It shouldn't, because we should be able to enthuse and incentivize all the central banks of all the countries and get them to move very, very rapidly. But in my relatively brief experience of these things, it doesn't always happen that way. And so we have to look at what the functions are. Firstly, the main target is get the UN 75 working and working together to be able to do as much as we can to explain how important this is and get the central banks and finance ministers working. That would be great. Now I have to be realistic and say there is perhaps a way which is going to be done more quickly than my target zero. And that is where I'm going to introduce Francis in a moment, who will explain more about the way in which the solution which we are very happy to support will be explained to you. And what basically it entails is hitting the 3% SDG target, in fact going below that down to 2.5% and doing it 10 years early. Now that is a true step that could be made by the UN 75, and would be lovely to hear as being one of the functions which is going to be a concentration. I'll lead on to where Amit is going to be speaking about all aspects of regulatory stuff. Yet another acronym, CAAS, Compliance as a Service. He will do a much better job explaining than me, and the way the rulebook operates, which is a major support function for all central banks. Particularly, we look at it much more for the recipient central banks and what the assistance they need. And I think from my standpoint, yes, we understand the foreign exchange, we understand transaction processing. You'll understand more from Amit how the regulatory side, and you'll understand from Francis and perhaps Brian later on from their side as to how that works too. My last piece of it for RTpay is to enable central banks to test CBDCs, yet another acronym, central bank digital currencies, which they are, 80% of central banks are apparently looking at these and trying to see where to go. Again, we concentrate on the recipient side and helping them to test CBDCs in a regulated market, i.e. remittances, is a way in which they could do it, particularly because a lot of the people getting remittances are unbanked or underbanked. So it does add a functionality that can be done to group all the transactions for the country in together into one structure. Final slide, please. So I'm not going to spend any time on the numbers, etc. Please make a note of the email address, cwilliams@rtpay.org. I want you to send me your problems regarding payments. I want you to listen as to how, or tell me how you can think you can help us get out to all of the people. I'm just going to pick on one of the numbers in here. If you take this current average around the world of 7% for remittances and go down to the 2.5%, which Francis will deal with, that on the current 600 billion would be a $27 billion improvement on where we are now. That is a lot. It's nowhere near as big as if you get down to my number of 100 billion, but that I accept mine's probably a little bit over enthusiastic, as my youth often does. But the 27 billion, I'm going to relate it back to something yesterday from the Secretary General. He was talking about the amount of money which he was desperately trying to raise for Yemen, and the fact that it was like $2.5 billion, and they've only got 800 billion being committed so far, and he wanted action. We're talking about something which is 10 times as much as that. Now that is, it explains why the remittances are special and why are they the element that we need to address with a great deal of urgency. And I hope if you see that as being the way forward, then some good comes out of this, because there will be an awful lot of extra money going to the recipients, and it can be related across into aid payments, etc. We need to know more about how to help the aid and donation, etc. But this will give you, I trust, a reason to go back and check, and go back and talk to your governments, talk to everybody involved, and make sure we try to get a view which is going to help those that most need it. I'm done. Thank you.
Thank you, Chris, very much. You already made an introduction to the next speakers, which makes my life easier, and actually to the next two speakers. But let me say a few words about Francis Mugisha, who is the Director for Africa for TransferLink. Since we are already running behind the schedule, I see the minutes ticking off, so I'm not going to say too much, but then Francis is also founder of Serium Advisory and Niche Management Consulting firm. And then, of course, over 18 years in management consultant in general. So Francis, please, the floor is yours.
Thank you so much, Marina, for the introduction. You made the introduction, so I'll straight away go to the second slide. So I think Raf has laid the foundations for laid the context of what we're talking about. The remittances are important. They have implications in a lot of our lives. I think the issue that I maybe dwell on a little bit is about the cost has remained very high until now. And in light of the importance of what remittances do in the lives that we are talking about, I think it is high time that we are able to do something about it. We all know the problem. I think the UN has led the way in setting SDGs target 10C, that remittances should be reduced to below 3% by 2030. And our solution as TransferLink is to bring that immediately at below that at 2.5%. And we are committing the end-to-end costs of remittances at that level 10 years ahead of time. It's exciting that when we are working with the kind of, I think it's the right time bringing, if you see what Chris at RTpay brings on board and what Amit Sharma will be talking about in Inclusive, it is the system TransferLink is ready. We are now at a point when we can actually deliver this. We can deliver the target, the SDG target, much ahead of time. And what we need is help to go over the bridge, and I'll talk about this a bit later. Now, if you could go on the next stage. So, what is TransferLink? TransferLink is a bridge between digital financial services. It basically is connecting one to the other and enabling a globalization of peer-to-peer payments, which are already happening in pretty much all our domestic markets. It is happening across disparate markets, across currencies. Now, the network TransferLink has built is ready. It is ready to be used, and we just now need to bring in the different partners that we need to be able to build the critical mass that we need to deliver this. As well as the network that TransferLink has built, we have a special product, mining, which is our way of facilitating our diaspora promise of a maximum of 2.5% this year and beyond. So this product is ready. We are ready with mining, and mining immediately helps us meet the SDG 10 as a target that is already that we already have. The next slide, please. The next slide. Next slide. No, the one before. Yes, that's the one. That's the one. Yeah. The next, yeah. So The TransferLink network brings in a lot of benefits to the users. It gives it makes sending money very easy and easy and easier as sending a text. And because it guarantees the lowest costs, it puts more money into the hands of those who need it, the customers in the end. For the money transfer, for the members themselves, because it's a member-owned network, members start with an equity into the TransferLink enterprise value. And this, of course, eventually helps financial and social inclusion in the markets that we serve. For the recipient economies, again, more money in the recipient hands facilitates economic growth and reduces global inequality. So there are a number of benefits that TransferLink brings and much more. Next slide, please. So as you can see, the space for money transfers and remittances has had many players for a long, long time. And it's a lucrative market. No wonder many have continued to play in this. And the ones that we have looked at in our research for our value proposition, we've looked at the ones that are already existing. The likes of SWIFT, which is the main of traditional banks, it has served its purpose, as well as the money transfer operators, the likes of Western Union and MoneyGram. These have all served their purpose, but at what cost? The cost of transfers using these channels has remained very, very high. Even as we consider the new kids on the block, the online fintechs, I think we've seen a change in the pricing in the cost of a bit of a decline in the cost of money transfers in the recent years, but it is not anywhere near the SDG target that we are all trying to achieve. And we believe that the time is now to try and come together and make sure that this cost is much lower. Now we've tested these markets just to have some kind of empirical evidence between the corridors of EU and the African corridor on values of remittances of just about 300 euros. And the cost has ranged between 20% and has ranged from 6 to 20%. Now, again, Africa and the continent is not the same. Depending on where you are, which country, which region you are, there will be dynamics that make sure that ensures that the cost remains very high. But even at 6%, this is much higher than the target that we have. So as mentioned previously, I think the product that we have, the money product that immediately brings us to this point to under 3%, is ready to be deployed, is ready to meet the target. What we need is the help of everyone that has the influence and the interests that might help us go over the bridge. This will come up in the next slide. Next slide, please. So, of course, our focus today as TransferLink is Africa, and Brian and the other founders of TransferLink have really done incredible work in bringing the other corridors on board. And for Africa, in the last 6 months, as you see on the slide, we've been speaking to many financial institutions and telcos, but we've had a bit of a difficulty in closing the deals. Maybe as a result of the COVID environment, where access and movement and concentration of many of the decision makers is elsewhere. They're trying to deal with immediate issues in the organizations. But I think, given the importance of bringing the cost of remittances lower than they are now towards the target, the SDG target, we need help to do a little bit more. I mean, our network, we have a number of people in different in different countries who are part of our TransferLink team, trying to onboard members. Now, we're not everywhere. We're not everywhere. And even where we are, there are a bit of restrictions. So we are hoping that this exposure and this discussion we are having now will help bring people on board, will help bring solutions on board that can help us do this much quicker. Now, for the multilaterals and the World Bank and the UN and the IMF and the UNDP and many other organizations, what we are really looking for is conversations with governments and central banks that, first of all, highlight that, remind ourselves that the cost of remittance is higher, it shouldn't be, because a solution exists, and also dealing with the elements of what might be their concern on the regulatory basis, on the side of regulation, and Amit will talk about it. There also is a solution. So if you like, the combination of what RTpay is bringing and TransferLink and what Finclusive will bring on board already builds an ecosystem that begins to answer the concerns that some of these countries, some of these decision makers might have. So that will ease the way for us to be able to deploy the solution as quick as we need to. And of course, we need introductions. We haven't spoken to all the financial institutions. We haven't spoken to all the other people that are in that space. And we are looking for the kind of introductions and the kind of collaborations that enables us to be able to achieve that. And we'll listen to the ideas, any ideas that help us move faster. So in a nutshell, the SDG 10 has been there for a while. We are in a very unique position in a time when the world is under pains on many fronts, but also an opportunity to solve something that has failed to be resolved for a long time. And we're excited to engage with all of you and see how we can move this forward. Now, I will not talk through the platform. This is what the platform is. If there are any questions later on, we will answer them. Thank you so much, Marina.
Thank you, Francis. It's exciting again. I wish we had a bit more time to really dwell into all the nitty-gritty and details of the platform, because it's really very concrete, very specific. I would suggest to move forward with the next presentation, and then we can complement things which still need to be addressed, or questions that will emerge. Indeed, the next point will be about legislation and regulation. And of course, every time we discuss costs of remittances, there's always the issue of regulatory frameworks which are creating a lot of costs. And this is there is a solution proposed how to address that issue. So Amit, let me just say a few words again. It's impressive career. So founder of Finclusive now, but also in the past or prior to Finclusive, you were a co-founder of Empowerment Capital. And I'm particularly interested that you're building your initiatives on the knowledge of working with your regulators within the US government, the Treasury, and of course, Office of Terrorism and Financial Intelligence. So I'm sure you're bringing your inside knowledge into your proposal. So without further ado, let me just pass over the floor to you, and we are all excited to hear what you have to say. Over.
Yep.
You should be on now, yes?
Okay, great.
Sorry, no, we don't hear you. There is an issue. Apologies for that.
Can you hear me okay now?
Unmuted, so there is some sort of a challenge with your audio. Can you see?
This should work, yes.
Yes.
I can hear you now. Well, thank you for that introduction. And as Marina pointed out, Finclusive, as we can see from the name, is really dedicated to financial inclusion. You take a technology-enabled approach and address issues are
Rita, I'm so sorry. I think it's kind of not working very well, the channeling. Any way how we can improve the sound from your end? No, I apologize, colleagues. We have some challenges with the connection.
Great. This should work.
Go ahead.
All set there. Can everyone hear me now? Wonderful. Thank you for that, and my apologies for the tech issue there. Thank you for Marina for that introduction. As you rightly point out, Finclusive is, as you can see from the name, is dedicated to financial inclusion, and it is informed by this need to ensure that we not only address technology-related issues in the engagement of a more modern financial services capability, including cross-border payments and remittances, but importantly that we do so with regulatory compliance in mind. Next slide, please. Ralph and others have pointed out the statistics related to cross-border remittance flows and the importance, especially to low moderate income communities, global south, the global poor, and how important it is not only in terms of cross-border flows, but how important it is to the very foundation of building economic resilience. And ultimately our goal is economic resilience and financial health. And that is underscored by a broader issue of the billions of people that are unbanked or underbanked around the world. And importantly, organizations as well. Often we talk about individuals, but when you really talk about the plight of the financially underserved in building financial health and resilience, you really are talking about jobs and organizations as well. And when you have millions of organizations, especially small and medium enterprises, which globally are greater than 90% of all companies, you're really talking about a lifeline. And so organizations too, small and medium enterprise, micro enterprises, need to have that access. And if they don't have the ability to store value securely, transfer value securely, that can be a huge issue. Now, a lot of that has been exacerbated by global compliance and the growth of global compliance over the course of the last 20 years, arguably in a post-2001 environment where anti-money laundering and counter-terrorist financing regimes were really expanded. And traditional institutions, banks, regulators, are conservative, and they want to avoid activities to preserve security and reputation. And as regulation increases, the cost-benefit analysis is being done. And which is why we're very pleased with organizations like TransferLink and that are alternative, modern, tech-enabled non-bank financial institutions that really can solve this problem with consumers in mind, with technology processes that connect cross-border, and now global regulators are increasing scrutiny on regulatory compliance, which is what makes this important. Importantly, remittances and cross-border value transfer have been identified by global regulators and standard setters like FATF, Financial Action Task Force, and others as being particularly vulnerable to money laundering and terrorist financing risk. And so addressing that is a very, very important concern, but doing so in a modern, disciplined, tech-enabled way is the important issue. And so the final piece is if we take traditional compliance, which has been challenging, piecemeal, inefficient, and bring a modern technology capability that brings a full stack approach, we can equally provide those compliance efforts in a way to keep that financial system and non-bank FI channels safe and secure and transparent, but also engage for inclusive purposes, because they're hugely important lines for driving financial inclusion. And so modernizing compliance so that it is to the global standards and incentivizes self-governance globally, because modern finance is cross-border, whereas regulatory compliance still is jurisdictionally bound. So this is what we are trying to do at Finclusive. Next slide, please. So what we do at Finclusive very simply is two things. One is compliance as a service, as Chris had pointed out. In a recognition that many institutions, banks, non-banks, and increasing fintech community have to go to multiple providers to do know your customer, know your business, customer due diligence, enhanced due diligence, monitoring, reporting. A lot of these processes increase the cost basis overall that end up being pushed to the ultimate consumer. And if our goal is to reduce the overall cost for remittances, we have to bring down equally the operating and compliance-related costs as we do the transfer, forex, and processing costs. And while Francis and Chris and Brian have talked a little bit about the processing and operating and FX pieces, we have to equally attack the compliance pieces. By bringing these compliance elements into one framework, a technology-enabled, API-based, accessible by modern fintech companies and non-banks as well as traditional banks, now you create a confidence for regulators that your compliance issues are managed to the global standard. They're equally applicable to traditional institutions that have been financially regulated, and now these emerging and growing important inclusion non-bank channels like you've just heard about. And we can do that in a very cost-effective manner. So what Compliance as a Service does is it brings a lot of these solutions and integrates them into one workflow with a global set of databases for international sanctions and watch lists, from know your customer and due diligence and identity management stores, for legal entity verification and validation, including even offline data, because in many emerging and frontier markets, you don't have access to do online or digital know your customer. You have to look at local providers to provide that information and intelligence. And this is what Compliance as a Service does. That global coverage and bringing it into one stack streamlines the process, and it's built to the global standards. And the second side of the business is really the access to banks to store value securely and to multi-form payments. And as Francis had pointed out, there has been an evolution from traditional payment methods like SWIFT to more modern payment or non-bank channels, now to really e-money, mobile, peer-to-peer, even digital asset and other type of value transfer. These are all important ways to reduce costs. All of the concerns now from a regulatory compliance perspective are we managing the anti-money laundering, know your customer, and compliance that's inherent for a safe financial services environment? And so that's what this CAS platform can do. It can plug in equally to both. And thirdly, and importantly, can we hold that value securely in an insured account? Because so many places, as Ralph had pointed out, just even holding value securely because of inflation concerns, personal, household, community security concerns, holding value securely is hugely important. So accessing banks in Africa, LATAM, Asia, and in the US to hold value in a secured account now in a global world allows you to hold that value securely and transfer that value for remittance and payments purposes. Next slide, please. Ultimately, the two core areas are, can we deliver a single full stack, one workflow approach for compliance, which is what Finclusive does, equally applicable to companies like TransferLink, as well as the banks, giving comfort to banks that all of those KYC and AML processes are managed in a global framework, and dropping down the operating costs that plague these institutions. Often those institutions are paying upwards of 25 to 30% of their operating budget on compliance alone. So if you can reduce that cost remarkably, you not only inherently drive operating structure down, but you also drive the value to the ultimate recipients, which is what my colleagues have talked about. And then secondly, being able to apply that cross-jurisdictionally in one environment. So our global coverage with KYC and KYB and enhanced due diligence providers in 160, 170 different markets allows for that connectivity. In addition, the connection point now to both bank and non-bank channels secures the ability to hold that value and transfer that value securely. Those are the two points of that business. So compliance is inherently bound with financial inclusion, whereas traditionally we have seen this as a false binary choice. You can either have inclusion or you can have strong compliance. And we argue you can have strong compliance that facilitates inclusion. Next slide, please. In recognition of the growth of these alternative financial ecosystems, like what was described by Francis, we recognize that the tension between regulators wanting to ensure compliance is maintained, while at the same time is cross-border and self-governed. So we started a consortia with a growing group of financial technology companies, bank and non-bank financial institutions, regulators, that takes the Financial Action Task Force global AML practices, as well as traditional payment gateway rules like SWIFT and ACH and others, and puts this all together in a very robust framework that no matter what kind of entity you are, no matter what jurisdiction you might be or what regulatory body you may come under, if you are issuing value, storing value, or transferring value, you're going to be covered for compliance purposes. And the rule book, which is a consortia-led initiative, now gives you a roadmap on how to deliver on that compliance, from your policies and procedures all the way to the technology that enables it, and including what regulators are going to expect of you. And that global consortia is robust, and more networks, more regulators, more entities are adopting it. And if we can do so, we now modernize regulatory compliance in addition that keeps pace with the technology advances of modern financial systems and payments. And this rule book is the governance structure for our compliance as a service platform. Next slide, please. In a nutshell and in sum, what you've heard today with the overarching concern of financial exclusion, and in particular, the specifics impacting the global remittance market, are pretty grave. The COVID-19 pandemic has made in stark relief what these issues are. Just in the US alone, where you think of a third to a half of the population being essential workers that are dominated by immigrants, minorities, low, moderate income. And if we want to facilitate the engagement, we have to solve this problem. Today, you've heard from a couple organizations that bring that portfolio or ecosystem approach that our colleagues have talked about here. And we're solving for both cost, compliance, and that interconnectivity. Now we just need to get started. So we've got the technology stores to do it. We've got the expertise in the ecosystem to do it. And we can actually facilitate the adoption of, the fulfillment of the UN Sustainable Development Goal of bringing those costs down, while also ensuring the security of the financial services sector in a more modern environment for cross-border payment flows in ways that meet the compliance challenges, but also drive more inclusion. And by doing so, we could actually beat the target of 2030 in just a couple of years' time. So we just need to get started. Thanks very much, Marina.
Thank you, Amit. Marina, with your permission, I just would like to, before we go to the audience, I mean, I'm a macroeconomist. I'm looking at these proposals, concrete proposals by three colleagues, and I'm baffled as to why we're still only talking about SDG 10. I mean, so let me start with Amit, since you wrapped up the discussion with this presentation. I mean, why and how are compliance issues still challenging these efforts? I mean, let's just start there. In your opinion, because I hear sometimes from my end, well, there's an AML CFT issue. How do we solve that issue? And what you're saying is, no, what your proposal is, by answering the compliance issue, you actually, are able to do everything else, including enhancing inclusion and participation among the needy. Yeah, the numbers given by Chris of the additional benefits by reducing the cost of remittances, the cost of remitting from 7% to 2.5% in the billions of dollars. So what is, where's the roadblock here? So let's start with Amit, if you could, just for the sake of the audience, what's stopping us? Is it compliance issue?
Absolutely. Let me answer that with two elements. One is a macro philosophical, and one is a practical. The philosophical, regulatory compliance has been created with an ethos of exclusion. Let me say that again for emphasis. Regulatory compliance, including anti-money laundering, know your customer, is one built on the ethos of exclusion. Is how do I understand Ralph, if I'm a bank or a non-bank, how do I understand Ralph or Marina or Brian and box his risk? Right? How do I understand what his risk is inherently to me and box it? And if you step outside that, that's a regulatory concern. And if I'm going to be fined by a regulator for having let that out, then I'm just going to not do business with Ralph at all. It's not worth the business. Now, you exacerbate that by the fact that the United States government and other governments, global regulators and standard setters, even many of the IFIs, have inherently labeled global remittance flows particularly vulnerable to terrorist financing. Well, what bank that is concerned with reputation and regulatory oversight will take on an inherent risk that basically regulators are saying are vulnerable to terrorist financing? Let's flip the model. Let's inherently push compliance under an ethos of inclusion, which gets me to the practical. The number one question that all anti-money laundering and financial system regulatory compliance is asking is, do you know your customer? That's it. Do you know who you're dealing with? And the whole point in the global remittance flow to the financially excluded, to the unbanked, to the underserved is, how do I understand the nature and value of your business and your activities, your economic footprint, your expenses, your income needs, your household footprint? That's know your customer. So we don't use compliance as valuable business intelligence to bring value-added services of credit and lending and transfers. Instead, we just say, how do I understand Ralph's risk, box the risk, and close it? We have to flip the ethos of compliance. Now, if we can get those process efficiencies that I talked about on compliance as a service and take this as valuable intelligence that understands household needs, community needs, now we can provide services, because know your customer is no longer just about boxing your risk. It's about providing you services to increase your financial health and economic resilience. Now what happens, that ethos turns into a practical way to, as both Chris and you pointed out, you can unlock $5 to $10 trillion of income simply by servicing the currently underserved and unbanked. And that is valuable. So we need to flip the ethos, and we need to put a practical, modern, technology-enabled way in what is now a global financial marketplace. And regulation has to simply catch up with that innovation. So that's how I would answer that question today.
So before I go to Brian, so what you're saying is the idea of knowing your customer, which is usually held up as the problem, as the issue of why not, the roadblock. You're basically saying it's good business to know your customer. You're putting the onus on the bank to engage in knowing the customer. Is this what you're saying, really? Is this how I'm understanding it?
We are taking what has been a back office cost center myopic view of compliance and bring it to the relationship manager and the bank lending officer and the credit officer to say, I now can build financial resilience for you because I have products and services to service you. And instead of just relegating this to just risk and compliance, we have to use this as valuable financial health intelligence.
Got it. Marianne, if I could, because I work on this at the IMF, and I just need to understand what this kind of the intricacies of what my friends are saying. So Brian and Francis, on the transfer link, I mean, if somebody were to say to you, what do you mean member of the network? What would be the definition of the ideal member of this network from a transfer link perspective? Whom are you looking for to be a member? Yeah. Brian, you need to unmute. Brian. Or Francis or Brian, you need to unmute.
Brian, do you not? Brian is taking this. Are you taking this?
Sorry, thanks, Francis. Sorry, Ralph, I was on mute there. Thanks for that question. It's a great question, and I suppose, like all great questions, it's not very straightforward to very easy and straightforward to answer. But let me say the one thing that all our members must be, and that is regulated within their own markets. We are not going to be, the transfer link will never be regulated in any market except within the EU, where our system is based and where we are subject to EU governance and oversight. So transfer link will never be regulated. So the members must be regulated within their own markets, or any markets where they're operative on the network. So if a member is operative in a number of markets, they must be regulated in each and every one of those markets. Then if we go beyond that, ideally the members would be engaged in peer-to-peer payments, wallet-to-wallet payments, or mobile banking transfers within their own market. And there's pretty much in most markets today, domestic peer-to-peer payments are prevalent. So pretty much every bank and particularly telcos with wallets are making are facilitating peer-to-peer transfers. Where it's not happening is internationally. It's not happening across markets, and it's not happening across currencies. That is clearly more difficult. So what TransferLink is looking to do is connect digital financial service providers across markets to each other through the TransferLink network. And as the member boards the network, the member will become automatically an equity participant in the network and hopefully the potential future value of the network. So that's basically, I mean, simply members must be regulated, and then we have a technology compatibility to look at. But any institution, as I say, that is involved, whether it's a telco or a bank, in peer-to-peer transactions, or is facilitating their users with mobile banking apps, they should be, we should be able to find a way of bringing them on board. What we're trying to do, as I said, is to internationalize P2P. And that requires a mobile or email lookup rather than the insertion of the traditional BIC codes and IBANs and account numbers and unique identifiers. So those are the type of ideal members that we want.
And given the benefits that Francis kind of highlighted of being part of this, including, of course, reducing the cost to 2.5 and less, and you're in discussion. So what do you think is needed to clinch the deal? I mean, I'm listening to you and I'm thinking, why haven't they all signed up? I mean, where is the stumbling block really?
Yeah, I mean, it's almost easy to blame COVID for everything now. And it's a kind of a fallback. It's almost using COVID as an excuse for not doing things, when what we should all be doing is using COVID as a reason for doing things, because of the damage it's doing socially and commercially and from a health perspective around the world. But we've spoken across all continents at the moment. We've been in the Americas, South America, we're in the US, we're across Europe, we're in Africa, we're in Asia. We have an introducer network, as Francis has mentioned already. And everybody, without exception that we've spoken to, is enchanted by what we're doing, entranced by what we're doing. Yes, we want to do it, but with a few exceptions. We have a couple of integrations going on we have an integration going on in Zambia, in fact, complete in Zambia, to bring on one of the telcos in Zambia. And we have some integrations going on in Asia, in Sri Lanka, through our representative down there. But everybody wants to come on board, but they have their priorities, technical priorities. We will do the heavy lifting on integration. It's API integration to our API, and we've built an adaptive bridge to facilitate pretty much any API. Just throw it at us, and we'll find a way to integrate it, and we'll make it as easy as feasibly possible for the institution. But it's just a bit of lethargy, I think, Ralph. Every commercial institution has difficulty at the moment. That goes without saying. Everybody knows that. We all know that. Yeah. But if we could just kind of get their heads up above the water and think about next year, when hopefully there's a vaccination, or the year after, to be in a position then to really deploy a low-cost migrant solution. And we guarantee 2.5% through the Mighty product, which is owned by TransferLink and would be adopted by all the members for migrant payments. The members can do any other kind of transactions they want on the network at their own price. So they can set their price for any transactions except migrant payments. That's the reason we're here. That's the reason we built the network.
Got it.
And so, there's loads of opportunities for profit in the corporate business and through FX management outside of migrant payments. So we need help. We need ideally a point of contact in central banks that we can go and talk to and say central bank in South Africa or the Reserve Bank in South Africa. We have been talking with Standard. They're very interested in what we're doing. Here are the benefits for the central bank, because we'll be dealing in hard currencies, going into soft currency countries predominantly. In fact, almost totally. So, it's that kind of help. So point people in the central banks that we can talk to as we talk to their regulated entities within the same market. So it's a tripartite kind of approach, and it's a win-win-win approach, and particularly with Amit's CAS. I mean, now there's because that's always a question. Is this secure? Are you regulated? What's about the compliance issues? What about KYC? What about AML? That's always the question. So kind of with Amit on board now with Finclusive and with Chris and RTpay, because I believe we can get to zero, but that's that if you try to make that leap now, you're overextending yourself. It's like setting up a new company and overtrading day one. You have a far better chance of going bust than if you win some early business first and then grow your business. I see this the same way.
So one question that comes up for Chris is all the funds from any country can they all be brought into the available money for let's say, I remit, let's say, to Lebanon, can be made available in the currency that the country needs? I mean, you're bundling everything together. Does that create any issue for, sort of making the money available in the currency that is needed?
Yes, thanks, Ralph. We do exactly that. The reason we can take one transaction per day, no matter which currencies it's meant for, is we go into a single joining currency, and that is actually the IMS SDR, special drawing rights. Now, the basis of the SDR, for those who are not familiar with it, is it's a breakdown of 5 different currencies, the major currencies of the world, etc., particularly sort of USD, Chinese yuan, euro, sterling, and yen. And what it means is that the AI solution which we've built into this is it doesn't matter which currency you're going to use. We've got the structure to go into those currencies. Ideally, it's cheaper if we've got offsetting amounts of funds for those currencies, but it doesn't matter that everybody's able to compete for the funds in the same way. And the basis of running the AI function is to allocate the funds correctly at the central clearing. And that's where we do have that little bit of extra experience about these things, and to be able to help in the way it's done and in the manner in which we actually create this zero cost function for the foreign exchange side. And generally, because we've been able to bring these things together so there's one transaction a day for the remitter, and we've got one transaction a day for the recipient country, because they're effectively getting all of the funds wherever they're coming from combined into one single net asset for them. So it's
and in the currency that they need, yeah,
they allocate the breakdown that they need of it, so they can have competing requirements from different commercial entities in their country, and they can be allocating it based upon the highest bid. And that is, again, part of the solution that we offer, which is where the structure could be the highest bid, no matter if that's for Swedish krona or if it's for Mexican pesos or whatever. A lot of it will be for US dollars, of course, but basically whichever is the highest bid value in SDR terms will be the ones that get allocated the funds, and that creates the best possible bonus for the remittance recipients based upon the fact that it will be a higher level. It's difficult to go into these things in any great detail, in short term, but believe me, we know how to do this. We know what's necessary. All we need is the central banks to say, this is an urgent situation and we need to get on and do it. And we're we're perfectly happy for them to take as much activity and do it exactly the way they want. But certainly we like the idea of the transfer link side of it as well, because it can be done by the commercial organizations within that, commercial banks or other units within those countries. So it's not a question of the central bank has to do it themselves. They can just allocate it to those they think are the most suitable for the job. So it's anybody that wants to have the details of all this, just contact us and we'll be able to send you out the actually how it works and how the structure is designed.
It would seem to me, I'm conscious of time and I know we're close soon, but it would seem to me that given what all of you have been presenting as solutions, viable solutions to this festering problem, that what is needed is some kind of lobbying at the ground, sort of at the ground level by the CSOs. NGOs are involved in the migration phenomena and that understand the pain of all these households that live. We call remittances, we call them livelihood, the lifeline, and this lifeline is under attack right now. And so you would think that you need some kind of a pressure to bring this this topic to the fore and say we need to resolve it. We need to resolve it now, at least with these, and people can look at the solutions that you're proposing and come back to you if there are issues. But we need to move forward. And what you all are saying is that solutions are here, technology is here. Let's get on with the business. And technology, and Ahmed is saying even the legal side is here. Let's get on with the business. I mean, I'll stop here because these were the questions that came, and I'll pivot back to Marina.
Thank you very much, Ralph. Indeed, it's as I said at the very beginning, unfortunately, it was clear that the 1 hour, 20 minutes, which we were offered by the organizers, is not sufficient to really go into all the nitty-gritty details, and that's where actually the solutions start becoming really becoming very, very tangible, and really we start getting the understanding of the mechanics behind and how they are complementary to each other. I like the way how Amit at the beginning spoke about that there is one solution about cost reduction, another about networking, and the third one is about compliance. So that it's really, because it's such a complex matter, that's very challenging to really go into one stakeholder only. You mentioned central banks. You spoke about the commercially driven institutions, which are looking for profit, of course, because they're for profit, but at the same time, increasingly we know that also for profit organizations are taking on their shoulders the sustainability, the social agenda. The social impact becomes really the motto of the day. So how to reconcile all these stakeholders who come with different interests. And towards the end, you mentioned that you need support of policymakers within migration area, those who would be then also advocating for the importance and relevance for migration related, for migrants, for their families. It's very complex, but it's at the same time, it was exciting today to see the convergence between different initiatives here, and then definitely from my side and from the side of Ralph, representing also financial institutions, the national financial institutions, we are listening in, and similarly our participants, I hope, also enjoyed the discussion, and this recording will be available. I hope that we'll stay in touch, both among ourselves, but also with those who join us today during this event. I hope that we are just like at the beginning of something, some realization that great, indeed, we talked about that. Now we're becoming very concrete. So what else needs to be done? And from our end, again, wherever we were going to be looking and identifying opportunities for channeling information about your work, we will definitely make sure that people are aware about those. And again, I think the way forward would be about clustering, not going on your own, but really coming into partnership, really bringing initiatives together. So let me stop and thank everyone who joined us today. We had a little bit of issues in terms of connectivity, but despite of that, I hope everybody enjoyed this in exchanges today. Definitely I learned a lot. So I am thanking you, and I wish everybody all the best. And as from the very beginning, we're open for further discussions, collaboration, and leaving our contact details here on the slide, but also, of course, through our social media and beyond. So I'm thanking here everyone and wishing everybody a good remainder of this week, and looking forward to meeting again in the future.
Thank you.
Thank you.
Bye.
Thank you.
Bye.
Thank you all.
Bye.
Bye.
Thank you, Marina.
Thank you.
Thank
Thanks,
you all.
Marina.
Thank
Thank you.
you.